Entities, let's start with Friday's closing numbers. The S&P 500 closed at 5,460.48, down 0.41% for the day. The Dow Jones Industrial Average ended at 39,118.86, falling 0.12%. The Nasdaq Composite finished at 17,732.6, down 0.71%. Despite Friday's dip, the broader market had a solid quarter, rising nearly 4% since March, and an impressive 14% for the first half of 2024. Treasury yields climbed, with the 10-year note yield ending at 4.38%, its highest since June 11th. This came after the release of tame U.S. inflation data, with personal consumption expenditures prices flat in May, and core PCE rising just 0.1%. Several notable stocks made waves this week. Banks like Wells Fargo, Citigroup, J.P. Morgan Chase, and Goldman Sachs saw gains of 1% or more after passing the Fed's stress test. Nike took a significant hit, plummeting over 20% due to missed revenue expectations and weak guidance. Supermicrocomputer experienced volatility, dropping 5% after sharp gains earlier in the week on rumors of joining the Nasdaq 100. Nvidia, despite a slight dip on Friday, finished the first half of 2024 up an astounding 150% from the end of 2023. Industrial stocks and regional banks had a solid day, indicating investor optimism about the U.S. economy. The S&P 500's technical outlook is mixed in the short term. The index broke through the floor of a rising trend channel, suggesting a slower rising rate or potential horizontal development. It's approaching resistance at 5,490 points, which could trigger a negative reaction. The RSI is above 70, indicating strong positive momentum, but also suggesting the index might be overbought. Overall, the S&P 500 is assessed as technically neutral for the short term. Despite this, the index continues to look bullish overall. So, buyers are entering on pullbacks, with the 5,300 level seen as a potential support zone. So, short-term outlook next week. Political factors may influence markets following the U.S. presidential debate and upcoming French elections. Why Fed policy will be in focus, with Chairman Powell speaking at an ECB forum on Tuesday. The June non-farm payrolls report on Friday will be crucial, with expectations of 180,000 new jobs and unemployment holding at 4%. Market sentiment remains cautiously optimistic, with a 64% probability of a rate cut by September, according to CME FedWatch tool. Outer medium-term outlook next quarter. Inflation trends are positive, with core PCE nearing the Fed's target faster than expected. If disinflation continues, we could see more rate cuts than currently anticipated. The market's concentration in a handful of tech stocks, like Nvidia, Apple, and Microsoft, is driving the S&P 500's performance, though this narrow leadership raises some concerns. Overall, the outlook remains bullish, but investors should be cautious of potential volatility and consider diversification. That wraps up our U.S. capital market review for the week of June 24th, 2024. Remember, while the market shows strength, it's essential to stay informed and diversify your investments.